You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
All right, everybody. That music means we are back once again. It is Thursday. It is a little bit past our normal recording time. It is 2 p.m. Central, 3 p.m. Eastern. Yes, it is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting network upon which so many of you are binging. If I sound back to my old self, it's because I'm back from the remote studio we just set up to do the option block live down there at the old SIBO. It's kind of fun looking over the new trading floor down there. That's why we had to push the time back a little bit. Needed a little time to get back to the studio. Got to lug all that gear back to the studio, listeners. And now we're back, and we're raring to go with a little bit of This Week in Futures Options. Remember, if you do like what you hear, this show, anything else on the old network, do throw some stars our way. It does continue to help new people discover the show. We're always excited to see the uptick, especially on TWIFO. I know not everybody out there is into, nat gas options or gold options out there, but the explosive uptake in this show as well has just been great to see. So we love to see it. If you like what you hear, do keep rating and reviewing. It clearly does help new people discover the content, even though this show's been running for some time. And of course, if you want to go above and beyond, and who doesn't in these crazy markets, you want to join us with some great Pro Q&As. We just made Pro Q&A 100, the 100th episode, free and available to everybody out there. If you want to check out what we're talking about, you can find that on the network. And then, of course, if you want to go above and beyond, join us for future Pro Q&As, as well as Options Oddities every Friday, as well as we're coming up to the end of May, so we're going to be giving out the May Pro Trading Crate as well pretty soon, as well as live access to this, everything else we do here on the network. TheOptionsInsider.com/pro is the place to go to learn more. As we go out and learn who's joining us today in the old CME Group hot seat, I am pleased to welcome back an old friend of the show, even though he hasn't been on this show since before the pandemic. Yes, the last time we talked to our buddy, Mr. Nick Howard, on this program. He's been on the hot seat a few times on the Pro Q&A side. But on the old TWIFO program, the show where we use all of his data all the time, was January 16th of 2020. I still find that hard to believe. Mr. Nick, welcome back to TWIFO, sir. It has literally been too long.
It has been too long, over 3 years. And I think probably if memory serves, or just based on the environment at the time, we were probably talking about how cheap gold was back then. We can go back, we can look and see, look at the chart says. I didn't look beforehand. I just looked at your show notes. But yeah, it's good to be back. Like you said, been around, but always nice to go back to the roots of things,
Go back to the roots indeed. Well, let's do that right now before we get into the movers and shakers and all that fun. It's been literally 3+ years since we've chatted with you. I know because I use it every week. I know you guys have added a lot of new coats of paint, a lot of new bells and whistles over there on the old QuikStrike platform. But for a lot of our new listeners, and they are legion, maybe get them up to speed, catch them up on all the new cool stuff you guys have put out on the QuikStrike platform since the last time you and I chatted.
Oh gosh, let's see. It's been a world of change since then. Hold on, I'm curious. I have to go back and look. I have to go back and look real quick to see if we have it. 2020. Yep. Gold was under 1,600 back when I was on the last time.
A bargain at any price.
It was. I thought that we were talking about it. We liked it around those levels. Well, what's been going on? Well, we're always continuing to develop what services we offer and the tools that we have available. I think the biggest thing, and probably in the works at the time back when we first had that conversation, if memory serves, we revamped the UI of QuikStrike again, with much to the chagrin of many people, because we kind of throw them off every time we restructure or consolidate or do whatever. We always doing it with the best intentions, but it doesn't always have everybody's support. So to jump to where we are now, I think we're at a point where we're going to leave things. We've left things alone so far for 2023. We did a big release, and we're going to just let it sit for a while and let people get acclimated to what's there, because we feel like even after all this time, we feel like we finally have the situation under control in terms of this is how it's laid out, this is what it is. But I think the big thing that's taken place over the last 3 years is, we have had for 5 or 6 years, we've had a facility called QuikScript, which allowed people to actually type commands in the QuikStrike and pull information back, whether that be charts and tables or even trade strategies. So what we've done since then, probably the biggest thing, is integrated this QuikScript and then also our what we call Quick Sheets. The variation on theme with us is really not that clever, I guess, because we're always putting quick in front of everything that we do. So it's QUIK, right? So we do have a Quick Sheets functionality, which really lets people have access to QuikStrike in whatever way, shape, or form that they want to, right? So we've even utilized the Sheets technology within all our different views within QuikStrike as well. So Quick Sheets is basically let you customize your experience, and you can do all kinds of wonderful things with the scripting language. You could ask for any spread; it'll pull that information back. In total, all the Greeks, up to 50 different columns that you can select to build your sheets up. You can ask for spreads by strike. You can ask by spreads by delta. So you can say, give me the June E-mini 25 delta risk reversal. It'll go find those strikes for you and pull them back for you. And you never have to type in again. So it'll always track the 25 delta risk reversal or the 10 delta puts or the 20 delta call, whatever the case may be. So that's been really the biggest thing. It's making the data accessible through the sheet so you can customize to your heart's content. Like for instance, I had a customer call me today, say, hey, we want to do this custom futures report with this, that, and the other thing. And I built it for them in about 3 minutes with the quick sheet. So it was what we found ourselves doing is people made requests. We were building these views for them, putting them in QuikStrike, and it was just kind of getting bloated. So we want to take a step back and say, well, how can we give people what they want and not continue to, expand this plastic bag to the point of bursting and then people really not appreciating what's there. So we give them the control now, using our stuff as examples to build their own sort of customized version of things. So that's kind of the biggest thing. And I'm really pleased with it. Our guys just crank stuff out and they just knock this one out for sure.
Awesome. Our keen-eared producers, while we were talking, went and dug up the show notes from your last appearance, Mr. Nick. And okay. Guess what the hot thing was? We were all hot and bothered because the Bitcoin options were finally launching on CME the next week. So it was the lead up to the launch of Bitcoin options. That's how long ago it was, the last time you joined us. In terms of movers and shakers that week, to the light side, we had number 5, the Russell 2000 up 2%. Number 4, iron ore Haven't talked about that in forever, up 2.2%. Platinum up number 3, up 4%. Number 2 was palladium, up 5.9%. Number 1 was lean hogs to the light side, up 9.5%. And to the dark side, our old friend nat gas off 2%. Soybeans off 2.15%, excuse me. Number 3, feeder cattle off 2.3%. Number 2 was heating oil off 3.5%. And number 1 was soybean oil off 4.9% on this. So I see soybeans. I know you talked about soybeans with us in the past. I don't see gold here, Mr. Nick. So maybe we didn't make it.
Maybe that was a part of my personal portfolio that I remember looking back, because I always liked it around. There were times when we were talking back then that, we started to see the rally up towards that 1600 mark. So maybe that was what I was thinking. But
you always did love your futures and a put in your back pocket in gold. That was your trade du jour every time you came on, pretty much.
I always like those out of the money's hedged, so you can, take the benefit of the lower margin to trade your futures, right? I mean, I'm going to probably talk about that again today at some point, because I saw a question in the show notes about strategies that people should know about that don't necessarily get used all the time. So, I'm a one-trick pony, I guess, but we'll see how it goes.
Well, last time you were on with us, like we said, it was lean hogs and nat gas and iron ore lighting it up. Let's see what's lighting it up this week as we head on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we highlight everything lighting it up to the light side and to the dark side over there at CME Group this week. You can see this report for yourselves. You can follow us on Twitter at Options or over there at CME Group. We both tweeted out right before showtime. I saw somebody asking. People always ask every week, without fail, is this recorded? Can I get access to it? Yes, it's a podcast. It has been a podcast long before it was a live stream. It was a podcast. It will remain a podcast. You can find it, of course, on all of your podcast platforms. So that'll save you the emails from this time next week. But Mr. Nick, I know it's been a while since you joined us. Do you remember how this segment works? So you got to pick a light side or a dark side to start with?
Let's go. You know what? Give me the bad news first. How about that?
A little bad news taste first. I think we can make that happen, listeners. To the dark side we go. Number 5 this week, we have soybean meal off 2.87%. Number 4, palladium. Palladium's been rocking and rolling a lot of late, off 3.39%, coming in at number 4 to the dark side this week. It was number 2 in the same direction last week, off nearly 6%. So a rough couple of weeks for palladium. Number 3, KC wheat off 4.67%. Number 2, one of our frequent offenders, it's nat gas, coming in at number 2 this week, off 6.5%. It was number 2 in the other direction last week, up 7.75%. So given most of that back this week. And the number 1 dark side mover this week, listeners, lean hogs off 7.71%. So Mr. Nick, some things don't change. Your last appearance, lean hogs, was number 1 to the upside. This week it is number 1 to the dark side, but we're still talking about lean hogs. So there you go, sir. Everything comes full circle.
Yeah, not something that you're talking about every day, lean hogs. We need what was the guy on WGN, Orion Samuelson, right? Back in the day, we used to do the commodities report in the morning. I just remember that being piped through my house as a little kid. I always heard that pork belly price report every morning.
There you go. Every time Nick's on, we got to talk lean hogs now. That's the new thing. All right, to the light side we go, listeners. Number 5, soybean oil up 2.05%. Number 4, RBOB up 2.19%. It was number 5 in the same direction last week, up about 3.4%. So a decent couple of weeks for RBOB. Number 3, Class 3 milk up 2.5%. It was number 5 in the other direction last week, off 3.6%. Number 2, hanging out in the ag still, it is corn up 5.13%. Number 4 in the other direction last week, off 4.5%. So pretty much getting back what it lost last week and then some. And number 1 to the light side, Eurodollar is up nearly 9%, 8.8%. Number 3 in the same direction last week. Of course, a lot of folks not really slinging the old Eurodollars. Even for this audience, not a lot of SOFR slingers. But I know you're out there on the 10-year and a few other spots on the old curve. All right, listeners, that's a lot to unpack here. Mr. Nick, before we dive into some of our products that are moving and shaking this week, I know one of the reasons you wanted to join us this week, not just because it's been 3 years and you missed us, but also because I know you're all hot and bothered about all things event contracts. You'll recall, listeners, we talked about these back when they launched towards the end of last year. We had an episode with Martin Franchi. He's the CEO over there at Ninja Trader Group. It was back on October 27th of last year. We kind of did a deep dive into event contracts then, but we haven't really had a chance to really check in with them. In fact, this dovetails nicely with this question we got a couple of weeks ago here from Verige, or maybe Verige. They asked, how is the volume in the event contracts these days? Haven't heard much about them since the last show you guys did. Well, hopefully you're listening today, Verige, because we're going to get into it today. Mr. Nick, let's start with, I know you're really interested in these. What is it that's captivating you about all things event contracts these days?
Well, at first when I heard about them, I thought that it didn't make a whole lot of sense because of the way they structured them. But after I've been playing around with them, watching them, trading a little bit, I like them because they're simple, right? So you can think of the event contracts in a couple different ways. A lot of times you'll hear people talk about different ways to, like, in the reality, they're just a rename of the binary contracts, right? And the binary contracts they're either above or below, right? It either happens or it doesn't happen, a 0 or a 1. So it was sort of when I first heard of them, I was looking, it's just a marketing ploy to start utilizing the binary type contracts and get them out there, because they really came into play after the whole meme stock craze, retail craze, after the pandemic had started, right? A lot of retail people were out there trading, and this was a way to sort of attract those same type of users. So I was a little bit skeptical at first, but as I started to pay attention, and if you're not familiar, these event contracts, they have a $20 total payout. So typically you're going to pay between the low price obviously is 25 cents that you could pay. The high price you could pay is $19.75, which you wouldn't pay because with your fees and all that, you would end up not making any money. So it's between 25, probably even 50 cents and $19.50, right? So you can either make a half a buck or $19.50. And I thought, that's kind of dumb. We're doing 20. Why not just do 100? But the reality is you do 20. You want to bet 100, you do 5 of them, right? So all in all, I've started to like them a little bit more, and they're easy. Ninja Trader, I believe, bought Trade Ovate, right? Trade Ovate has a nice interface, is the one that I've been using anyway to trade it. But I do like them because they're simple, and it's a nice introduction to people who maybe want to transition from trading futures or transition from trading just straight out equities or equity options to get into the futures market, right? And it's tied to, there's 11 products: E-mini, NASDAQ, Russell, Dow, gold, silver, copper, crude, nat gas, the euro currency, and Bitcoin. Okay. So there's 11 available there, and simple. You bet yes or no. I bet it's going to be above something, or I bet it's going to be below something. And the interesting thing is, to open, you can't sell to open. You can only buy to open. So if you bet yes, now you can technically trade a no in that at some point to sort of do a conversion, right? But the reality is, if you buy a yes and you make a little money on it, you can then sell what you own. Okay, you can't sell to open. You could sell to close. So it's really pretty. I like it because, and I will say up front, every trade I've made has been a loser so far, just so you know, because what the tendency I think that people are going to have, and this is where I get excited about the possibilities. The tendencies are for people that try, you know what, it's $2. I'm going to bet $2 that it goes above this. But the reality is it might be outside the range, right? I bet it's going to be above 41.80. It only cost me $2. I don't care about losing $2. If it goes above 41.80, you make $18, right? So your return on that is actually pretty good, right? If you bet 2, you make 18. So the returns are really good, if things start to happen. But what I'm starting to see, and as we play around in some of the tools we built, you can really treat it like you're trading options as well. So you can buy an at the money, which is a 50-50 chance, right? That'll cost you $10. And then you could buy these other call them wings. You spend a little bit more money to do that, but you spend 15 to make 5, right? That's a pretty good return. So I'm really starting to like them. I think if people start looking at them more than just making a bet on a cheapie or something like that, I believe they're going to be pretty interesting. So I'm rambling, but with the reason, I guess, is to start talking about the volume. So the volumes aren't crazy. So for instance, I'm looking at the E-mini today, And, we're looking at about 400 yeses maybe. And I'm just looking at the strikes and about maybe, equal amount of no's, right? So there's not a great deal. And when you're talking about what that premium that gets, you're probably talking about not that much money. So if we do the average of $10, you're talking about $4,000 on each side. So the volume's not great, which is a little bit disappointing. But I also think that's the case because there hasn't been a really smart push in terms of how to get those out there. So that's why we built the tools. Nobody had any tools out there unless you open an account. But now we have our tools that are going to be available in certain places where it should make it a lot easier for you to see the markets. Like if you go to the event contract page on the CME, it only shows the at the money from the morning. So if the market's moved at all, you have no perception of what's happened with that particular event contract. So I've been working with them to try to get that to be a little bit more clear to the user. But I like it. I think it's going to be a nice segue into options from futures or from equities. And then what we've also tried to incorporate into some of the stuff that we're presenting is the next step would be potentially looking at the zero DTE options, right? So we have a nice little section on our tools that show the zero DTE because technically you want to use that zero DTE option to kind of look at what the volatility of the market is for the day. So you have a little bit better idea of how that event contract might actually come into play, like how much you could potentially move given the current volatility and one day to expiration. So that's a little bit of a long-winded answer, I guess. I hope that answered the question. If you have any questions, I'm glad to answer those questions. But Mark, take it from here. What do you think?
Yeah, when they first announced these, I had the exact same response that you did. I was like, why can't they use the now pretty much standardized binary nomenclature of 0 to 100? People understand that intuitively. It's a probability. If you think something has a 49% probability of expiring in the money, it's going to be trading at around 49 cents. It's intuitive. So I agree with you. The 0 to 20 takes a little bit more effort to wrap your head around, I think. But I think once you do that, I think it is intriguing. And longtime listeners of this show will know I've always been a fan of this format for precisely the reason you mentioned. It's a great introductory product, a gateway drug, call it what you will, into the realm of futures and futures options. The earliest incarnation of this show was actually done back, was called the Futures Options Roundtable with the folks over there at Nadex precisely for this reason. They had binaries that were great starter products for people who may not be familiar with the crude oil market, for example, but they are intrigued. They could look at a binary. They could intuitively reason out whether they think something is going to settle above or below a strike in the next hour or 2 hours or day, whatever the case may be. And that's a great starter point for them you don't have to go bite off a whole CME futures contract just to take a swing and take a bite at the apple. It's a much easier place to start. And so from that perspective, I was very excited when I saw CME launching them. As Nick said, right now, you can do pretty much 10 assets right now. So you can do Bitcoin, as you mentioned, you can do the E-mini S&P, the NASDAQ, the Russell 2000, and the Dow. So you get your full flavor of equities there. You get Euro USD. So if you want a sampling of a little bit of FX, there you go. And then you get pretty much all the metals, or the big metals at least. You get gold, silver, and copper. And you get a little bit of the old light sweet crude to top it off there as well. So you get a sampling of all the markets. Obviously not everything. There's no corn in here. So the ag folks going to be a little bit left out. There's only one FX, for example. So you're not getting everything, but you're getting some of the big heavy hitters to start with. So I'm with you, Nick. I was a little bit kind of confused at first as to why they went the route they did. But I think in general, if you're listening to this show and you're intimidated by going out and, let's say, biting off a whole nat gas contract or gold, whatever the case may be, I definitely think you should be looking at these event contracts because there's very small barrier to entry, 0 to 20. You can't get in too much trouble, really. And it's a great way to start thinking about these markets in maybe a new way. And I really like what you said there, Nick, about 0 day, because everyone's obsessed with 0 day. I just came back from the OIC conference in Nashville a couple of weeks ago, and everyone and their mother, the brokers, the exchanges, the trading firms, everyone couldn't stop talking about all things 0 day. It is all the rage. Those contracts dovetail very nicely with these. In fact, especially in the equity realm, you'd be hard-pressed to be able to trade these binaries effectively without knowing what's going on out there in the 0 day space. So I think one should really drive volume in the other. I'm kind of surprised to see we're not seeing more paper out there. But you mentioned some tools you have out there on the event side, Mr. Nick. Really quickly, let us know, what are you working on? And maybe some cool stuff we can sink our teeth into. Maybe that'll help us drive a little bit more volume, a little bit more interest in these event products, sir.
Oh, absolutely. And I'll send out some information about that. They're sort of semi-live in a couple platforms. But what we have, so like I mentioned, so first things, take a step back, right? So you mentioned the probability, like if something's trading 49, that means probably a 49% chance, 49% probability that it's going to go. The simple thing with these is you just multiply the premium by 5 and you get your probability. So that's all part of what you would see in the display of the tools that we have. So what do we have? So we try to make it so it instead of going to CME site and looking at potentially a strike that's in the money or way out of the money, and you really wouldn't want to be interested in trading it, we give you a presentation of all of the strikes that are available for that product, so you can see how the prices relate to each other, right? So I get basically a pricing sheet for each product, and we have a full dashboard, so you can watch all 11 products at once, or we have a dashboard, associated with the equities, the metals, the energy, the FX, and the crypto, right? So the tools would make it just simple for you to see what's going on in each particular event contract. The other one was, we give you a nice, like you show in the dashboard, you see where you get the return on the day for the products that you use in QuikStrike that you have in the show notes, and that sometimes where you use that to talk about the movers and the shakers. So we have a nice little version of that, so it's immediately available, so you can see what the market's doing. And then we have sets of sheets. So you have basically a pricing sheet, and it's going to show you, hey, these are the strikes. This is where you can buy it. This is, there's what we try to do too here is, Mark, when you first got on the floor, people started talking about this whole bid ask thing. And it took me a little while to get my head around it, right? It's like, I can bid, I want to pay this, but I can't buy it because that guy won't sell it for me, but that's my bid, So we try to make it so it's a little easier to understand. So we reference it as, you can buy at this, or you can try at this price. So it shows you where you can get in the market, and you see a nice range of, max profits and probability percent. We're even trying to put, like, for people that are coming from the betting world, we have the odds in there. So you can, if you're a gambler from a sports standpoint, it's going to make sense to you right away. And then we show you the change percent on the strike. And we also, like I said, we use that 0 days to expiration volatility to show you, standard deviation ranges for the price movement in relation to the strikes, right? So, we're trying to get everything in front of you so you can make a good decision. Because for people who are, charting the futures, they're looking at percent moves and stuff like that. So now you can see where each strike is from a percent away from the open, that kind of thing. And then we give you, we give you futures charts with the strike prices on it, so you can see where you can get in and see the relation of the candles to those particular strikes. We give you a trade history view, so you can see how the price has moved from a bid-ask standpoint, and then we explode little bullets on the little bubbles, on the chart, so you can see where the volume actually took place, and you can see the the trade flow, the price flow, and the trade activity by strike, and we give you a futures chart as well, so you can say, okay, I need to be able to take a look and see what this thing is doing, and then from there, what we're trying to do is educate the user, like we said. So we've given you this event information, and then we jump you over to some tools like, hey, here's an economic calendar, and we show you all of the 0 DTs that expired today and all the numbers associated with it. So you can start to say, okay, this is the next step I might take. And then we give you some trade examples too. So if you want to start learning about options, we lead you into that path. And then we have a bunch of 0 DT information. So you can see a pricing sheet. You can see our famous vol to vol. So you can get an idea of the volume by strike. We show you all the trades that occur in the 0 DTE, as well as open interest associated with that, because a lot of people will trade price range on the open interest of a contract as well. So we try to give, I try to make it a tool that helped you make decisions to trade, but also educated you along the process to becoming a more seasoned, experienced trader. And as you know, typically you start in one venue and you move into another, right? You do an outright, which would be like an event, and then you move into options, et cetera. So I will make a link available so people can take a look at that and see, or I'll tell you where you can find the tools right now. And there's a couple places that are working to help people get started in this venue, and you'll be able to find the tools there and some widgets and stuff like that. So you'll start to see our widgets on different brokerage platforms, and potentially you might even see the ability to trade these right from the QuikStrike interface with whatever broker that you currently use.
I was going to say, we need to get those in the QuikStrike, the TWIFO reports, so we could see the events, if they're listed in that product, events alongside the regular options, right? So we could see what's going on there all in one fell swoop, sir.
Absolutely. I mean, that's really the point. I mean, consider it like if you're a guy or a gal in the market that trades pretty actively, and you have and you're at strike or something like that, you got a lot of gamma on a particular strike, or we're hovering right at strike. You know, there's plenty of opportunities to go in there and do a little bit of a hedge right in the event contracts, right? So I think and that's the thing, we have this little trade sheet or strategy builder sheet where you can put a position in there, and it starts to let you see, okay, I think my range is this. We're hovering around here, so you could almost do a strangle, so to speak, that's going to pay for your bet in the middle of the market. So you end up really, if we are truly in this range, you end up having a pretty good chance to have a nice return with a very small dollar amount output, right? Because when you think of returns in percent, like who cares? If I said you could make 50% on your money, I don't think anybody, I'll take a penny a million times if I can, right? I'm making my money, right? Who cares? So when you start to see the return on the investment that's possible for a low output of dollars from your pocket, I think it tells a compelling story for people to trade, right? Because, right, if you said, well, you're only going to make a penny on that trade, well, I'll do it a million times and I'll make a million pennies, right? So I'm really trying to get the point across of, here's some opportunity for you when you start to look at your return on investment. It makes a lot of sense to take a look at these.
Yeah, especially given the light of the equities and how much of the attention right now is all on that front day, not even front week, but front day. It is a no-brainer to make the leap into sub one day and get out into some of these binaries out here and to say, hey, is it going to settle above or below this strike? It's a pretty straightforward concept. So if people out there, we're speculating now in the traditional equity options market. People have been asking in our pro Q&A for months now, oh, when are we going to get sub one day? There's stuff out there now. You can go in these binaries and trade these now. So if you're trading the 0 day in the S&P or in the NASDAQ or some of the other major indices out there, and you're not even looking at the binaries, what are you doing? There's flow out there you could use at the very least. You can see how people are lining up. Are they fading one strike? I think it's going to settle below it or not. I think that would be very informative in where I'm setting up my 0 DTE, whatever you're trading, verticals or flies or whatever the case may be. You think that information would be of some utility. So yeah, Mr. Nick, we gotta add all that into the TWIFO report so we can start reporting on them here on the show. That would be awesome. That's why you haven't been on for 3 years, because every time you come on, I give you homework, sir.
No, well, yeah, that's I'll get you access to that specifically, so you can start taking a look at it and commenting on it. But there's another thing. I've been working with somebody that's potentially going to have an offering, not necessarily in this listed market, but in crypto, because it's easier to sort of implement this kind of thing, where you'll be able to do a bet per 1 minute candle, right? So just imagine that, right, where you can say, I'm gonna finish up or down. I'm going to
1 minute.
In this yeah.
Have we reached that point now, Nick? Is that where we are? 1 minute?
I think there are people who will bet on anything. Well, think of this think of this 1 minute candle thing, right? They're not the prior candle, the current candle's related to some extent to the prior candle, obviously, right? But you could start to, there's a lot of different opportunities there. But have we gotten to that point? I think people are thinking about ways to engage. But imagine too, on a 1 minute candle thing, you could trade for 5 minutes, right? And then you could be distracted and you don't have to trade. You come back and you look at the chart again, you could trade for another 5 minutes, right? And it becomes a very accessible market, especially if the barrier to entry is low and you don't have to bet a lot and all that kind of stuff. Yeah, I think that we're going to see a lot of strange opportunities to trade because the appetite is so great, especially given the amount of people that were introduced to the markets because we were stuck at home during COVID. So yeah, it's kind of fun to think about. It's actually energized me again, to be honest with you, because it's a whole.
I could tell you got a little pep in your step. I could tell when you're fired up about something, and maybe the listeners can't because you're a low key guy, but I could tell when you're fired up about something. You definitely got a little bit of a bee in your bonnet about these binaries, sir. So that intrigues me in and of itself.
Yeah, I think that I'm excited. I've showed the tools to a few experienced groups of people, and it's really piqued their interest in terms of opportunity, presentation, and availability and ease of use and all that kind of thing for the product. I'm doing my best to try to disseminate that info to the exchange as well, so they see that, hey, there's some real opportunity here to, one of the goals of every exchange is to try to incorporate that retail market into their end user base, right? So this is a real chance, and it's if you bet, you got to pay for it right then. So you can't. There's no margin here. If you have $50 in your account, you can make a $10 bet. You can make a $20 because it's going to take it out of your account, and you're going to get that money right back. So it's a great way to do it, right? You can't get yourself in trouble. Even with the zero DTs, right? You buy something, it goes in the money, you don't sell it. You if it's not cash settled, you're potentially on the hook for something, right? So you got to be really careful. This allows you to just sort of set it and forget it, and see where it goes from there. So yeah, pretty fun, pretty interesting. It's just, if you listen to me over the years, we like building. We like building. I like thinking of ideas for creating tools. That's what we do. So this has given us a chance to sort of think of the market a little bit differently and try to put things in front of people that make it more available to them. So yeah, I'm a little bit excited about it. So it's cool.
Well, we're going deep on events today here, event contracts listeners, but it's fascinating stuff. So we're kind of dispensing with the usual format a little bit. We got a question coming in here on our live chat, Option God, asking the question I'm sure a lot of people have. He says, we need binaries on nat gas. Are they coming? Frank agrees. He said nat gas binaries could be interesting. Yeah, Nick, nat gas, a market that's moving quite a bit. It's one of our frequent offenders here on the show. There's usually three. There's nat gas, there's Bitcoin, and then you throw lumber in there. You got our trifecta of frequent offenders. I'm going to guess, though, they probably want an options market that at least has a weekly to list a binary. Is that the stumbling block there, Nick?
Oh, no, the nat gas, it's here as an event. It's out there, right? So right now, it's the only problem I see with it is there's markets, but nobody's trading it, right? So you can go out there right now and trade nat gas event contracts. So for instance, and what's and here's the part that's really interesting, right? Is their 10-cent strikes is the difference. So the at the money this morning was $2.60. So they're incremented at it's zero. Well, it's 10-cent strikes and then half a dollar strikes after a certain point. So it's 10 cents for like 5 around, and then half a buck, and then a buck after you get out a certain amount. So they're all here. Here and available, but I see no volume today in them. So you never know. But there are markets, there are sizes, there's size on the bid ask. People are making markets. So if you want to trade it, take a look. It's up there.
I'm looking right here, and you're right. They don't have them listed even on the main CME event contracts page. You have to dig through to click on more info, more resources. And then if you go there and click on what products are available to trade and scroll all the way to the bottom, you can see nat gas there. But if you go to the main CME page, they don't even list them. They just stop at the WTI one. So that could be part of the problem. They're not really surfacing them.
Yeah, I think that is part of the problem. There hasn't been proper effort or I don't know if effort's the right word. I don't think it's been done very well in terms of how they're presenting this information. And like I said, it has to. There are partners that are working on trying to build this up, me being obviously one of them, only because I think it's not so much because I've been asked, because I think there's opportunity there from from an introduction to the markets to people, because you got to obviously crawl before you walk and walk before you run, right? The old standard cliches, but this gives people plenty of opportunity. And the thing I like about this too is that you're sort of, I'll tell you, the bets I've made have lost because I'm just like buying premium. I'm like, oh, $3, I'll take a shot, right? I look at the chart once, but you really, in order to make the most of it, you got to do a little work. You got to look at the charts. You got to maybe put some trend lines in there. You got to look at the vol, see what the ranges are. So yeah, it's a good way to get educated, and it doesn't cost a lot. And really, the only way when you pay for an education, it's a lot more satisfying than when you just try to look and learn and watch the numbers and say, I pretend I do this. But if you actually spend $8.75, you're going to pay a little bit more attention, even though it may not be a lot to somebody, but at the same time, now you're actually vested, right? So it's there, and you got 11 markets you can learn, right? You can watch them all at the same time in the tools that we have set up. So you can pay attention. So I really changed my tune a lot in terms of my thought process about it, because I think that there's it's everybody should know what's going on in the world. This is an easy way to know what's going on, right? Everybody should know what our stock market's doing, what our commodity markets are doing, and what better way than to watch 11 numbers and see whether it's up or down for the day or the week or whatever the case may be, right?
It's funny, you mentioned 11 markets before, and it kind of threw me off because I only saw 10. And the CME website says a straightforward way to access over 10 of the world's most important few. So they don't even count nat gas for whatever reason. It's very strange. It's like nat gas. You think they'd want to highlight that one the most? That product moves more than anything almost. And yet, for whatever reason, even in their descriptive text on the page, they only say there are 10 contracts available. So yeah, someone needs to get a hold of them and say, wait a minute, you actually have 11 products. Yeah, Frank in our chat, he noticed the same thing. He says CME website says only 10 binaries are available, but there are 11 with NAT. Yes, exactly. Yes, they are missing out on there. But your point is valid, Nick, which I've said this before a bunch of times. You hear a lot of people talking and doing their analysis. I don't care what it is. It could be earnings season. You have whisper numbers coming out from analysts for different earnings calls, or could be crop reports, whatever the case may be. People are always going to have their nonsense estimates that they put out there. Nothing is ever going to beat real money. At the end of the day, real money, people put effort in when their money is on the line. So any analysis you could do, listeners, real money products are always going to be a better indicator than any sort of ephemeral indicator you could cook up out of there. So I agree with you. Just for that purpose alone, listeners, you should be watching these things. Nick, we're kind of running up against it already. We've been kind of going on about event contracts for most of the show. If there is a product you want to sink our teeth into before we go, we could probably squeeze one in, or do you want to just dive into some questions? I'll leave it up to you.
Well, I enjoy questions. I want to have a chance at the end also to talk about some of the other stuff we're doing. I'll say this. What's been interesting by watching the event contracts, and typically I don't watch ES that much because I'm a rates guy, so I'll tend to watch the treasuries and stuff like that. But I've been watching the E-mini and E-mini, S&P, and because of where we are from a debt ceiling standpoint, I've noticed just sort of how boring and tight the range has been over the last few weeks, right? So that would be my only observation I make from a digging in standpoint. But how I love listening to questions because I don't know what they are, and it is always exciting to answer well on your feet.
All right, you haven't been on in over 3 years. We'll have some fun with you then. It is time, listeners, for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right. Let's get to it, listeners. Nick, you were talking about 0-day. That leads directly into our question of the week right now, listeners, because it was pretty much exactly a year ago that this whole frenzy really kicked off in earnest. That's when SIBO listed their first SPX weekly. CME listed them right around the same time. So it's pretty much a 1 year ago party now. We can all look back one full year in the rearview mirror and ask ourselves a question we're asking you right now. Has the launch of these products changed the way you trade options? I gave you two choices. Yes, I'm short term now. I'm all in on all things 0-day, or no, I don't trade these. Mr. Nick, you're big on the binary, so let's start there. Are you a big fan of all of these 0-day products? Have you been dipping your toes in those waters? And then B, what do you think our audience is saying?
Well, you know me. I live my days in the pits, so I tend to be more conservative with my trade now, and have them either be, these event-oriented ones or a little bit longer window type of stuff. So I'm not personally doing it, but I do see the volumes on it. I do see the open interest, so I know people are doing it, and I think some people are doing it right, and some people probably are doing it very scary, because I've heard stories about people saying, well, all I do is sell these 20 delta puts and I just make money. So, and you know what we say about that? They make money until they lose all your money, right? So I'm sure that I would probably say, if I was to guess, I'll 58% to 42% saying yes, they're using them. What do we see?
Interesting. Yeah, you're kind of coming into, they're kind of close to 50-50 as well, which is pretty much where we're hanging out, but actually slightly biased the other way, Mr. Nick. 53.7% right now saying no, I don't trade them. And then 46.3% saying yes. And weirdly enough, it's been pretty close to 50-50 almost the second we posted it. It hasn't really budged from that. So these are perhaps more contentious than some people would let on. Obviously, the volume is there. People are trading these. So the exchanges, the brokers, they all love this stuff. Out there in the trading community, it seems like these are clearly a little bit more contentious out there, listeners. Get your votes in if you haven't done so already. You got, looks like about a day left. So if you're listening on the podcast, you will have a chance to chime in, just like a bunch of people did. Mountain Goat Capital said he's pretty surprised by this poll. I've seen others like it, but he says he and many others he knows have been killing it for a long time with 0DT. I'm not sure how long. They haven't really been around that long, unless you were pre-listing a year ago, unless you were just waiting for expiration day in trading. But that's another conversation. But he sounds like he likes them. Pariah Pants, one of our pro members, says, I rarely trade 0DTE, but I love daily expiration. So he's down with the concept. He's just not trading them. And then we got Age Del Aquarius here saying, my opinion on 0-day would get me banned from Twitter. I'd be curious to see that, just to see what would get you banned. Maybe put it in a DM so you don't get banned. But there you go. Contentious. Do you agree, disagree? At Options is the place to go to make your voice heard. We already hit on this question here from Vera J about event volume. You mentioned this one before, Mr. Nix. Let's jump to this one from AJ. It sounds like this one intrigued you. AJ wants to know, is there a particular option strategy that you think doesn't get talked about much, but more people should be using right now in this market? Always looking to up, I should say, my options trading game. You kind of gave a spoiler on this one already, Mr. Nick. I got a feeling you're going to say puts and futures in gold, but maybe you're going to surprise us. What do you got in store for AJ?
No, well, I'll hearing the question again and working off my prior comments about the ES, I could go out there and say, when you're in a market that's sort of rangy, right? Like this, like the E-mini is. When I say E-mini, obviously there's other E-minis, but I'm talking about E-mini S&P, right? And and you have the opportunity to trade them on a daily basis, probably something to look at are these, I don't know, 20 or 40 wide butterflies, right? Because you're in a range, you can play these butterflies. They're probably pretty cheap, or maybe they're not so cheap, but the risk is low on these, right? You can only lose the premium that you pay, right? So I think in this market where we're kind of tightly range bound, you have a lot of opportunities to trade with these daily expirations. Maybe put flies and call flies are something to look at. What do you think, Mark?
I'm a big fan of flies. I trade a lot of flies these days. I think they're very intriguing in these environments. Kind of depends where you're looking, kind of pick your poison. Depends what kind of vol levels you're looking at, obviously, as well. That's a big factor. People keep trying to lure me to the dark side of flies in 0-day contracts. I haven't quite gotten there yet, Mr. Nick. That kind of, to me, is anathema, a one-day butterfly. It kind of flies in the face of everything you know about options, but they are popular. People do like them. So there is a use case there. I haven't just sunk my teeth into it yet, Nick.
Yeah, I think what the other interest, of course, right? A lot of people look at butterflies and say, I want to do a butterfly that I'm going to get like the 6-to-1 on, I'm going to on my money. So you have to look and see what's available, and you might have to do something that's a little further out. But if you further out in this range might be 3 or 4 strikes, but we've seen sort of this 30 to 50 point range of late in this kind of trending market sideways, in particular in ES, right? So yeah, I just, something to think about, something to look at, because the other thing nice about butterflies, if you're trading, CME contracts, you could do a handful of butterflies. And I believe that there's, once you get to a certain number of contracts, people do this with the butterflies quite a bit. You get the exemption on the market data fees too. I think you probably could talk more about that, Mark, since you're actually trading them. But there's some opportunity to save yourself some money there and take a few bets as well. You look at it from an odds standpoint.
Yeah, gotta love a little bit of the old 1256 goodness out there at the end of the day. Let's go out here. We got time for we can squeeze in one more. Let's go to Pedro. Pedro C says, this question is for the TWIFO program. Well, you sent it into the right show. You passed the first test there, Pedro. He says, why do you feel the CME crypto options have struggled to gain volume against existing offerings from Deribit and others? Well, Nick, you have your hooks in behind the scenes on all the different platforms. You see all the volume at the end of the day. This is a question we've gotten frequently on the Bitcoin and the ETH stuff. People are excited about them. They want to trade them. Then for whatever reason, the volume hasn't really materialized. Pedro C wants to know why that is, Mr. Nick.
Well, if I think of it from a personal standpoint, right, I believe that the barrier to entry in these is too high from a dollars in your account standpoint. So that's probably, I would think, the number one thing from a pro tail down, right? It's too much. The contracts are, even with the smaller, we started out with the 5 contract, right? And then we go down to the smaller contracts, even with the micros. I still think that because of what's required from a margin standpoint, it's making it kind of tough. So that would be my logical guess at things. I mean, the market moves around enough. And if you want to trade these, the place to trade them is the CME, because you know that you're getting what you pay for, right? You don't, on those other exchanges, you're not exactly sure, what or where or who is behind what's going on. But at least when you're doing it on the exchange that that your money's protected. So I think that it's a margin thing, and I think it's just to me that would be the primary piece.
Yeah, that margin is quite the big barrier to entry. That's kind of the one complaint we continuously hear about these. So maybe we'll get some movement in those. Hey, in the meantime, listeners, we were talking about binaries. There is that Bitcoin binaries. If you want a lower barrier to entry contract, 0 to 20, can't get much lower than that. So maybe that's a good place to start. You want to check these out, of course. You head on over to CME Group or just search for CME and event contracts. It'll take you to this page. As you mentioned, this page a little outdated. They don't list all the contracts on it. You gotta have to dig down to find the last one, which is Nat Gas. But they are there. It will list, as Nick mentioned too, they don't kind of show you as the markets move, the new at the money, that kind of stuff. So there's some work that needs to be done here, but at least it's a good starting point. It'll hedge you in the right direction. And Mr. Nick, that music means we have come to a conclusion. Man, an hour flies by when you're having fun, does it not?
Oh yeah, I mean, yeah, I was watching and we were going pretty fast, but hopefully it was a good conversation for everyone.
Well, before we roll out of here, you kind of hit us with all the bells and whistles. We talked a lot about binaries as well, but before we go, if there's anything else you want to leave the folks with, sir, now is the time. The floor is yours.
Yes, I do. So, we've talked about it for a long time, but we meaning an entity related to us, not necessarily Bantix and QuikStrike, but we created an entity that will cover equity and equity options.
Ooh,
and that will be
nice.
The entire opera feed we'll be watching and reporting on and creating the same kind of tools you see with QuikStrike. We'll also be working with a company named Chata, which is going to provide us with a natural language interface to the market data. So we'll be using the latest AI from this company. It's been around for about 6 years. A great company, does a lot of work with some big entities out in the Pacific Northwest. It's a Canadian company. So you'll be able to go in there and ask straight up English questions and get market data back. So we're really excited about that. What else is there? And I think those are the two things, the equities and the AI.
That's pretty big. So you're saying I can finally get the quick skew on Apple I've been asking you about for how long? How long have I known you? How long have I been saying we need this on like Tesla and Apple and all this good stuff? Finally, we can get it, sir?
Yes. I mean, not yet. We're in the midst of, so there's a process involved, right? The opera feed is a massive deal. So you have to really work to make sure you're processing that accurately and properly. So we're there. We have the data storing. We're building the tools, and yes, you'll get. We're going to go back to our roots, coming full circle to that term, and offer sort of the 6 basic things that you would need as part of any kind of options analytics platform. And I think, the skew and quick skew will be one of those. So I'll let you be an early beta tester since you are an old long in the tooth equity guy. It'll be good to get your feedback. But I'm more excited. I'm as excited as I am about the analytics. I'm excited about the Chata AI engine talking to the data and making really sort of things you'd have to really search and filter for, some of the more esoteric things, immediately available just by asking the engine questions. So that technology, and you've heard me talk about Dialect, which is a tool that has demonstrated what the Chata engine can do against the equity market. So Quick is going to really pick up where Quick is the name of the product, which is going to really pick up where Dialect left off with the Chata integration. So we're real excited.
Well, what better day to talk about that than AI Day? Everything's all AI today. NVIDIA's exploding to the upside. The whole market's rallying on the strength of AI. So Mr. Nick, guess you got a little bit of that AI pixie dust sprinkled on you folks over there at QuikStrike as well. Listeners, you folks know where to go if you want to see this stuff for yourselves. Bantix.com, BANTIX.com, the place to go to kick the tires and light the fires over there for all the things on QuikStrike. Remember, we just kind of scratched the surface on this show. There's a whole bunch of other great data we don't have a chance to get to. Sounds like more coming all the time. If you want to see the free version, get a little bit of a sample, get a taste of it, you know where to go. CMEgroup.com/TWIFO. TWIFO is the place to go to get your sample taste over there. Kick the tires and light the fires. Then you go over to Bantix.com. Upgrade to the full kit and caboodle. That's going to do it for us today on TWIFO. That's also going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. So our usual bat time for volatility views. We'll have Mr. Bixologist join us there to break down the crazy week from a vol perspective. After that, for all you pro cats, we'll be back with options oddities to break down a wild week from an unusual activity perspective. Probably can do the whole show just on NVIDIA today, given how much movement we got up there. But it should be fun. Stay tuned for all that. Then, of course, we're off on Monday, so no OB, no crypto. And then back again on Tuesday with our usual slate of programming all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group. the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.